video is being recorded on the late evening of Sunday, September 24th, 2023. Hope you all had a great weekend. And in this video, I'm going to talk about the weekly outlook for gold and silver. And I'm going to sprinkle in a few medium-term thoughts and a few macro thoughts, some other important developments that could be taking place. So let's get to it. Okay, so with gold and silver, what we're seeing right now, over the last 4 months or so, you can see these highlighted areas. We're basically trading in a range. So for the most part, gold has been trading from 1915 up to 2000 for this period. Silver from 2250 to 2550. Silver, we have the three bounces here off the 400-day moving average. Or you can look at a 20-month moving average or an 80-week, and you can just go back 25 years. You can see the significance, how it's important. In a lot of bull markets, when silver bounces off this moving average and it's sloping up, when that happens, it's been like an incredible buy signal, and silver has made huge runs. But I can make the argument we're not really in a bull market yet, although we're close. But anyway, so short term, you had this bounce a couple weeks ago, so it looks like silver's probably going to be able to continue up to 2450. I mean, look at these candles, a lot of white candles here. So these are accumulation candles. So I think silver should be able to continue up to 2450, maybe 2550. We know, looking at a weekly chart, 26 is resistance, really significant resistance. I've said it before in the last couple videos. I'd love to see this climb up to 26. We're also coming up end of the month and end of the quarter. As far as end of the quarter, I think it's around $26 on the quarterly chart is really significant resistance. So it would be something to see silver close the month and the quarter, above 2450 or around here. But, that aside, short term, I think this is going to continue to the upside. With gold, silver has been outperforming in recent days, so not quite as strong in the short term with respect to gold. You have kind of the last couple days after, the big Fed-induced pop. You had the big move down, then kind of a weak recovery, much better action in silver. So, but still, if I think silver is going to climb up to 2450, probably we'll see, a little bit more upside in gold. 19, where is this? Right around 1960, 1965. So this is going to be resistance, and also you have around 1980. So even if gold continues up here, there's a lot of resistance, and gold has been in this range, just like silver. And so my concern with, you have a bounce here, you have that bounce, that was a weaker. I mean, the more it's testing this moving average and struggling to get up to this line, the more bearish that looks to me. So I don't want to be presumptuous, but, this week probably could see more strength, but, medium term, I definitely think there's the threat where you could see a move like that possibly. Same thing in silver, maybe get a move like that. But it obviously, I was going to say it depends on the macro factors, which is true. But, if the right macro comes into place, which I'll talk about in the next chart, then I wouldn't be concerned because you could have a move like this, and then, it turns out that this is really the major bottom. So that's a scenario I think to think about. But so very short term this week, I think the path of least resistance is higher. Now, let me get into this before I waste the whole video just repeating myself. So here we have gold against foreign currencies. Another way of looking at that is gold multiplied by the dollar, the ETF UDN. It's not an exact calculation, but it's close enough. Gold against the S&P here, silver against the S&P. And so this percentage is the net spec position. So obviously pretty high here. It's coming down 35%. I'll do a video on the COT and the net spec position tomorrow or the next day to talk about the significance as far as where we are. Obviously it's much lower. Here the speculators are actually net short. That's the minus. So this is the 600-day moving average. If you look at, that's not quite equivalent to, I mean, if you look at the 40-month, the 30-month, the 20-month, like all these long-term moving averages, they're coming into play 1830, 1840, 1850. So this is just one here, 600. You could do the significance. Look, it's support here before the breakout, kind of support here before this move, support here, resistance here, then it sells off, resistance here, then it holds it again. So again, if we see gold come down like this to the 1800, I mean, that's not, I mean, I think this is 1850 here, and then you have the moving average. So if gold does a mini break below 1900 or 1910, that's really not going to concern me that much. You'll get more people selling. And like I said, who knows? If that happens, this could set up, a really significant low over here, potentially. Now, getting down to here, looking at the macro factor. So gold against foreign currencies, since the beginning of August, we've seen some good strength here. So that's encouraging. This is really encouraging, looking at gold against the S&P, because every significant move with respect to gold, in the last 25 years, I mean, almost every significant move, you always see gold against foreign currencies and gold against the stock market. They're leading. I mean, this is turning up before, before gold price in dollars does. I mean, a little example here, just look at this low here. Gold had already, the ratio bottomed here, so it was trending up here. Same thing here. So you had that positive divergence, even though gold had this breakdown. Remember, it was a false breakdown. So what we're seeing now, gold against the S&P, is that like a 2 or a 3 month high? I should have zoomed in. I can't see. But anyway, any more strength here, gold against the S&P, is going to confirm this bottom. And, silver against the S&P, this looks pretty good as well, because we've seen, multiple bounces here. This is a bit of a higher low. In a scenario where if we see gold, go like this, but these charts are still strengthening, I mean, that to me would be a really, really good sign. And I would get even more bullish, even if gold came down like that. Now, I'll have to do another video talking about the macro, but it has a lot to do with long-term bond yields. They broke out last week. And look, if that could continue to put a lot of pressure on the stock market, put a lot of pressure on risk assets, maybe increase the threat of recession, bring it, more forward, closer to where we are. If that's the case, I think gold in real terms, you continue to see, especially this strengthen and this strengthen. And again, these are leading indicators for the gold price. And so if we continue to see gold against the S&P strengthen, gold against foreign currency strengthen, that's a really good sign that, the gold price is potentially closer to breaking out. So, no, that's a lot to take in for one video, but that's how I see things now. Very short term, it looks to me like path of least resistance over the coming days should be higher for gold and silver. And we'll continue to follow what's going on with the breakout in bond yields and how that's going to impact gold, both in nominal and real terms. But again, gold, this right here, this could be the start of something really important, over the next 3, 4, 5, 6 months. So got to keep an eye on that. Thanks everybody for tuning in. Let me know what you think. See you guys in the next video.